It's all deathly serious today. Welcome. I'm Bill Rambo, founder and partner with What's Next for Financial Advisors, and this is What's Next for Financial Advisors, the podcast. Very, let's start again. Welcome. I'm Bill Rambo, one of the founding partners of What's Next for Financial Advisors. Welcome to What's Next for Financial Advisors, the podcast. Today's session with our good friends Al Cumplido and Marcin Krolikowski from AMP Consulting falls under the category of this is how we do it. And let me tell you something. These two men, they know how to do it. They do unbelievable work in the field of their field, and we're going to have them tell you all about it. I'm also joined today by my dear friend and partner, Mr. Tate Kirst. Hello there, Tate.
Hi, Bill.
How are you today?
Hi, Marcin. I'm good.
Hey, Tate. How are you?
Good.
We're all geared up for an exciting conversation. Behind the scenes is our dear friend, our director and producer, Brandon Kirst. Brandon, thank you for all the hard work you put into these. And we're excited, as I said, to have this conversation with the partners of AMP Consulting. So, Al, Marcin, I'm going to give you a lot of leeway here to take over. You guys do a lot of webinars and videos and things of that sort, podcasts. So I'm going to give you a lot of latitude. Introduce yourselves. Start talking about AMP. Tate and I will pepper you with questions. And if Brandon doesn't like anything you say, he'll edit you out.
That sounds fantastic. And thank you guys for having us both. We really appreciate it. My name's Al Cumplido. I am the founder and co-CIO of AMP Consulting Group. We're an outsourced investment advisory company that helps independent financial advisors build institutional quality investment programs. Marcin, I'll let you introduce yourself here.
Good morning, everybody. I'm Marcin Krolikowski. I currently serve as the co-CIO and head of research at AMP Consulting Group. My background in finance leans more towards quantitative analysis, both from my work experience, having worked at Citigroup's emerging markets trading desk, developing algorithmic trading models, as well as from an educational standpoint, where I obtained my CFA, MBA, and PhD degrees all in finance. In that capacity, together with Al Cumplido, I advise on market research analysis, asset allocation, and portfolio construction, and conduct macroeconomic research. Our work helps clients build cost-effective, resilient, and robust portfolios. In addition to the above, I also act as the Chief Operating Officer at AMP Consulting Group, making sure we have the systems in place that keep track of the many tasks that need to be accomplished within the specified time.
And thank you, guys. And what Marcin didn't mention a couple of things, Al. I'm going to start with him. Number one, he's got a lovely singing voice. You should hear him.
I did used to sing in the choir, Bill.
He fills up a room. He fills up a room. And these are two wonderful guys. Also, Marcin, I don't want to let this slide by. You are a professor at Providence College, correct?
Yes, I'm an associate professor at Providence College of tenure, where I mainly teach MBA students and seniors investments. And recently, we actually won the CFA Research Challenge local competition, where we competed with 12 other universities, developing an equity research that was judged by the local CFA members, and we beat number of prestigious schools in the area, including Yale, Trinity, and University of Connecticut.
It was Rhode Island and Connecticut schools. So those weak sisters up north in Mass, you didn't get a piece of them. But I heard you say last week when we talked. First of all, congratulations. That is huge, wonderful. But I heard you say last week the people at Harvard and some of those other schools, BC and some of those other schools up there, you're coming for them next. Is that fair?
Exactly.
Is that fair? All right. Cool.
Take care of Yale first, and then we work up.
Well, you started the safety school, and then you move up a little bit. So that's cool. That is fantastic. That was so exciting when we heard that. Congratulations again.
Thank you, guys.
And he really doesn't sing that much. But anyway, Al.
I just wanted to say it's great to know you guys and have worked with you for a number of years. It's a real pleasure. You really improved our business, made us more focused, optimized our practice. And just besides that, you're a great bunch of guys that we love to hang out with and have a good time as well. So it makes for a
That's
wonderful experience.
Thank you. And unfortunately today we can't be joined by our third partner, Ben Mossman, but he is certainly part of the crowd and a big part of what we do and in support of our clients such as you guys at AMP. Al, you should have like 15 fingers because you have fingers in a lot of things. How many fingers do you have? Let's see your hands quickly, please.
I'm growing some more just for this podcast as we speak.
Talk about some of the things you're doing outside of AMP that actually support your work at AMP.
Sure. So I serve on the State Investment Commission for the state of Rhode Island, where we oversee the pension system and the college assets, among other assets, for the state of Rhode Island. I am a past president of CFA Society Providence, really actively involved in the community with financial literacy throughout the state. I'm a board member of Junior Achievement, which helps promote financial literacy to young students, particularly in inner cities, and do a whole host of other things, but they all tend to have the same correlation as you mentioned, Bill. It's all focused around finance and how do we improve lives through finance.
And last year, and I'm sure it's going to happen again this year, you did a future of finance, the event that Molly and my wife, attended.
Yeah, that's right.
Talk about that. When is it coming up again? Because I want to make sure we're there again because we had a wonderful time.
Yeah, no, I appreciate that. So we're focused on that one in the fall. And really what we were trying to do is, so Marcin and I in our ecosystem of finance, we really deal with a lot of kind of high-level finance talent from different elements of finance. And we always said, well, what if we can get that talent and have them give advice to people that are just starting into finance, the future people in the financial industry. So we brought together just all-star panels with really great investment talent, and we put together people that were interested in getting into finance, building career paths in finance. And we just had a fun time with it. We had drinks, we had food trucks. We partnered with many different groups, Bank Forward, Millennial RI, and it was a great event. So looking forward to doing it again sometime in the fall. We've had a lot of demand for it, so we really want to up the ante this time around.
It was exceptional. Maybe Tate, you and Ben can fly in for that one, and they'll give you a speaking role at it. It was great, and you talk about bringing in talent to speak to the younger generation, but the younger generation had some nice speaking roles as well.
That's right.
They were at the forefront. I mean, some of those folks I got to talk to. They were very nice. Come up and introduce themselves to your grandfather, Bill. And they were wonderful to meet and just unbelievable. I mean, I felt very, very overwhelmed. It's a good thing Molly was with me because she can talk that language. But anyway,
yeah.
So, all right, cool. Hey, Tate, why don't you tell us about yourself? Tell the crowd just so we know everything about you as well. Start with that one incident leave that out. But anyway.
Yeah, I'm a founder and a managing partner with Bill and Ben. So I've been in the financial services industry for 27 years now, mostly on the coaching and consulting side, helping advisors build bigger businesses and better businesses and identify what their next steps are. So, been around Bill and Ben for some time and been fortunate to know Al and Marcin over the last few years as we've helped them kind of move forward. One of the things, guys, though, that I would really like to understand about is what drives your passion. You're both very passionate about the industry, about investing, but also about bringing along the next generation. So I'd really be curious around where did that passion come from? What drove you to be where you are at this point?
Yeah, maybe I can start here. I'm very passionate, as you say, about the next generation because I would never be in a place where I am right now without the help of my professors and the past mentors that I've had. I think a lot of students can relate to that and they can remember the professors that they had in their life. So for me, it's kind of giving back because when a lot of students kind of start in my class and they're looking to get a job, their CV is pretty blank. They need somebody kind of to vouch for them and to give them kind of a leg up and to tell them they are the person for the job. And a lot of my professors in the past have done that for me. So that's why I like to give back to students. And Yes, and also make them well prepared for the workforce. My courses are renowned at the university to be relatively hard. Yesterday we had an exam, so I had a number of colleagues come up to me and said, "My students are really scared about your exam." So I had to take a deep breath, but I'm preparing them for probably the most competitive industry in the world. So they have to be well prepared, and they're going to be competing with a lot of other, students from the schools we just now mentioned. And they have to be well prepared, and they're also representing me and the university and the parents. So I take a lot of pride in that. And although it might be hard, I do remember that the professors that were the hardest in my, undergraduate and graduate studies, those are the ones that taught me the most. I remember the most. So I love to give back, and there's great success stories that some of them have worked actually for us at M Consulting Group that are now working at JP Morgan, Goldman Sachs, Citigroup, and many other firms that we had as interns.
Yeah, and I can vouch for that, where some of the interns, which were just some of the brightest people that you'd meet, young people, would constantly be afraid of Marcin's exams. So Marcin's such a great guy, great to hang out with, but they were always so afraid of his exams. So I always found that funny, but he's spot on in terms of preparing them for what's going to be one of the most difficult industries. So my passion, I really loved finance since I was a kid. I bought the first stock at 13 and it went from there. We might save that story for another day, but really the passion on working with advisors is just how cold and lonely this business is when you're first starting. To make it as an independent advisor in this business is extremely difficult. And while I was young, really the way I started was by partnering with other advisors in a whole different setting. It was helping them make cold calls for insurance clients. It was helping them make appointments for 401k meetings, just doing whatever I could to add value, quite frankly, to just substantiate my being in the building. I didn't know how I was going to make it. Didn't come from any wealth. I had no natural market to speak of. So just trying to add value to other advisors as a way to kind of stay in this industry that I really wanted to be in. And that just evolved. And my passion has always been investments. And it was just a natural segue for me to say, hey, can we build something that does that same thing? Instead of making cold calls for insurance, maybe we can up the ante a little bit and add some better value as my career grew. And that ended up being investments. And it's a place that we're super passionate about. And we're proud to be able to team with other advisors to make them have, bring them a fuller experience, because it is lonely even for them, right? It's lonely for everyone. So the more you can have a team-based approach, the funner this industry is, I'd say.
Lonely and confusing. We're going to talk about specifically what sets you and your business apart, your approach. But first of all, Tate, I don't remember if it was 8 years ago, 10 years ago, working with some clients up in Warwick, Rhode Island, and hearing about this young guy, Al, that they brought in and how sharp he was. Was it 10 years ago, 8 years ago that you started that?
Yeah, about that. Yeah. A little over 10 years ago. Yeah.
And look at him now. Look at him now. You know? Anyway, but no, it was. I remember when you came on the scene, because you made an impact early. You really did, with your approach, and your passion and your smarts. Now,
I'll make an impact even before then. He always makes an impact. He's always a presence in the room. He's a great guy.
I definitely paid him to say that, by the way, for all the.
You only knew him from the 8 years ago, but he made impacts before that too.
I'm sure he did. Now, speaking of impact, I just want to throw some props at my good friend Tate. Tate basically built practice development coaching program at a national financial services firm. I got to know him, I don't know, 20 some years ago. Tate, we met and kept in touch and became friends, and eventually I actually worked for him as a practice development specialist, as did Ben. And Tate knows everything about the financial services industry. He may not be expert on some of the stuff you do, but he knows everything. And I mean that sincerely. And you talk about passion, his passion for building organizations and developing people, teams, and not just how do I do more business, but things like succession and continuity and efficiencies and structure and capacity issues. My man Tate is the king of the hill when it comes to that stuff, and I'm just very fortunate to be working with him. Brandon, his son, don't know nothing, but no, I'm kidding. Brandon is wonderful. He's our marketing and resource associate. He does all of our social media, runs our website, supports advisors with helping to track the numbers in their business. He is wonderful as well, as is Tate's wife, Brandon's mother, Amy, who is our chief administrative officer. So one big happy family. Tate has actually been nice enough to legally adopt Ben and I. So it really is a family business. Anyway, Tate, anything you want to add to that? I don't think any of it was fluff or puff. You are one of the absolute best, brother.
No, well, no, I appreciate that. I mean, it's been a lot of years, and looking at it from the advisor standpoint, right? That's what Marcin and Al both said. It's really all about understanding it from the advisor standpoint. And there's a lot of firms out there that lose track of that as things progress in their business. And that's really kind of always been my passion, breaking it down for the advisor, helping them move forward, and always remembering and looking at it from their perspective. And that's why, as we've worked with Al and Marcin, what they really do is bring some professionalism and some knowledge to the advisors from their direction. So it's been fun to get to work with them, but I'm looking forward to helping them continue to move forward and what makes them different. I think where they're focused, there's going to be something that's going to be coming up in the industry, and people pay more and more attention to it. And they have a unique approach, and they're obviously brilliant. I mean, I think everybody can do the quantitative analysis that Marcin does. I don't know why his tests are so hard. It can't be that hard. But looking forward to hearing more about what they do.
We're going to get into that in just one more minute. A point of personal interest, if I may. We're filming this, recording this early March. And I don't think you guys know, Tate might, but March 26th will be my 40th anniversary in the business. And I'm thinking I'm going to put another good 5 on it, but because I should probably, because out of the 40, I've probably only put 5 good ones in to begin with. All right, let's talk AMP Consulting. Let's go. Let's get deep. So let's start with what you do, how you do it, how it's different. And if you forget to say it, I'm going to remind you to talk about defending advisor alpha.
Absolutely.
Go ahead.
So we'll kind of give the genesis of it. When I first started here in the industry, what really stuck out to me, I remember talking to a sales manager at the time, and I'll leave the name of the third-party asset manager out for their sake. But really what I was looking at is when you'd go to do your client reviews, the portfolios were always subpar, to be nice about it. And I would ask them, I'd say, well, this is just kind of like an index with a bunch of fancy managers in there, but they're charging you about 1% to do it. Why can't we just use something lower cost and give a streamlined performance? And the answers what actually stuck with me the whole time. It was, hey, well, do you expect to get paid? And I said, well, I'd hope so. I said, well, you're not going to get paid if you use a bunch of index funds. And that was early, 2010, 2011. And that kind of stayed in the back of my mind for a couple of reasons. Just one, it felt super unfair to the client. You're going to sacrifice on returns for a long-term client goal simply because that's not the nature of how we can get paid. And second, this is like an index portfolio. This manager, what they did is combined a lot of what they'd say hedge funds all in one big portfolio. They charge you 1% to do it. And the returns were not only terrible, you had basically an underperforming closet index anyway. So that just stuck out to me as kind of extremely disingenuous, aside from the fact that people in the industry got paid an asset management fee, but they never managed any assets. And that always felt super disingenuous to me as well. So as I kind of grew in the career and worked with advisors and tried to find a way to kind of make my niche, the big unlock came down the line where I first started taking my CFA charter. And after I passed level 1, I came to a group of advisors and I said, well, this is what I know I want to do. let me start by helping you manage your annuity allocations. And my thesis was just like, you know what? Nobody manages these assets. There's kind of like this underlying safety net. So if I mess up too bad, it's, there's some other things going on there. And they took to that. So I'd create these packets, and they had manager diligence, they had well-constructed portfolios. And that was really what started the process of them getting used to me at a young age of managing assets. And then that started to translate, and people started to use that a little bit more widely within the groups that we worked with. And it was when our old broker dealer introduced asset managed portfolio platforms, and the ability for advisors to now create model portfolios and distribute them to their clients, that created the true unlock. And that is why we're called AMP Consulting Group, by the way. That's what the acronym stands for. It's Advisor Managed Portfolios. And I said, there has to be a better way to approach this and take some of those things that I used to think about, the fact that, cost matters, and the fact that a lot of what advisors do every day never gets noticed by clients. It doesn't get put into a client statement, but they do add so much value. And a lot of this was at the time where everyone thought that robo-advisors were going to take over, and they were questioning the value proposition of advisors and all of this stuff. So I spent a lot of time reading white papers like the Vanguard Advisor Alpha, Quantifying Their Value, Morningstar's Alpha, Beta, and now Gamma report. And I said, how do we take all of these different topics or different areas where advisors can add value that are independent of investment results, and actually make them part of an investment process and deliver that in a way that highlights what they do, not just the asset management, but their actual advisor alpha that they bring to the table. And that's what started. It started in about 2014, end of 2020, end of 2014. And it was really, Bill, one client at a time. Like, I would have washed your car to get a client at that time. So it was just literally a brick at a time, one client at a time, putting together different materials that separated them. And it started taking off. And we started attracting a lot of assets, initially primarily from the asset manager that I'll leave unnamed, that had come up years ago. Initially, it's just the cost arbitrage. We were going to get better performance because it was more reliable indexing at 90% discount of the delivery cost. And the advisors started gravitating to that. And then as time went along, we started building some momentum. I met Marcin probably in about 2016 at a CFA meeting, and we just clicked instantaneously. Our values, kind of our approach, a lot of things just fell into place. And I'd say he's the first official hire at AMP. And it was the best move we ever made, because it really was the unlock for what I saw was one of the biggest value propositions that we bring to the table, is that advisors need a way to differentiate themselves. And they also want to signal expertise in areas where they're maybe not experts. And by aligning their brands with our brand, specifically someone like Marcin, who now we have a PhD and a CFA charter holder, it's not just, we're a third-party manager that's managing your assets. We're actually credentialed talent on your team. And that, to me, sparked what became a kind of J curve for us at the time, because an advisor's ability to take their brand and align it with really strong credential investment talent, clients had never seen that at the time. They continuously said, wow, how do you guys have this team? How do you guys put this together? And we were off to the races at that point. And then we really started focusing on the investment process, getting the smartest independent people that we could think of to stress test our research. And that's built into something very robust, where our insights are not just Marcin and I. We leverage insights from some of the brightest minds you'll find in the industry. And we can do that in a very boutique, independent basis, so that you're not just kind of taking them off the model shelf and putting all your client assets in there and then slapping a fee on it. You're actually involved in the investment management process and substantiating your fees. So that all is what we focus on, is advisor-driven alpha as the primary framework for how we add value. And I'd say the second biggest thing is for advisors being able to say, hey, we have PhDs and CFAs on our actual team managing client assets.
So Kate, I've seen these guys firsthand at work. I know you've you know all about it, but I was there firsthand when they worked with an advisor that I referred to them. And Marcin, if you can recall that case, I'm sure you can. Talk about some of the findings in your research. Talk about some of the things that you did with that advisor in reviewing her book of business and what some of the results were. And then I'm going to mention another result that kind of goes back to what Al just said. Do you remember, Marcin?
Yes, sir. I remember. Sometimes there's a lot of teaching that has to go on when we meet an advisor. One case that you mentioned here, the advisor that we worked with, she was predominantly just looking at five-star managers on Morningstar and claiming that these are the best managers, when there's in fact a lot of research that shows that actually once a manager reaches a five-star status, their performance actually goes down. So basically, if you're buying, it's like buying Nvidia right now. Potentially, it's already gone up so much that you're buying something that has already gone up a lot in value, and that's kind of a simple way maybe to invest. Well, I'm just going to buy a five-star manager in every single asset class, when that is not actually the optimal thing to do, not the optimal strategy. Another thing that we often have to teach is about diversification, asset allocation. A lot of advisors that we are working with, for example, some of them don't believe in international diversification. There's a lot of research that shows that by diversifying, adding various asset classes to your portfolios, things like commodities, things like international markets, that is able to improve your performance, your risk-adjusted performance over time. So a lot of our stuff that we do for advisors, at least initially, and we can go to some of the stuff that we do more in detail, it goes into the educational point of view.
That's an excellent point about the five-star managers, and advisors don't have the time to even think that deeply through, as you just laid it out. I'll give a couple other statistics that I recall. You can correct me, either one of you. I think that advisor had about you looked at that advisor's book of business as an allocation. Basically, you put everything that she was using everywhere into one pie. I think there were about 355 holdings, and I think after you guys worked your magic, it went down to about 88. I also think that the average expense ratio went down about 20 basis points. Does that ring a bell?
I think a little more than that, actually.
Okay. All right. Yeah. Well, then I don't want to get greedy, but
math is a strong suit, guys. So,
but that was quite impactful to that advisor. And here's the most important thing. That advisor got energized about getting out to clients and talking about what you were doing with her, and used it, to cement the relationships she had, promote additional relationships, drive more new business, held away assets and referrals, because she could talk about this exceptional team she had working with her to help build a coherent investment policy statement, but also to do the type of research that can help save money and increase returns.
And that's a good point that you bring up, Bill. I would say not also energized, but it gives you more time, because before that advisor had to spend, there's only given set of hours in the day, she had to spend a large amount, choosing the investment. She had to follow 300 managers. And now she had way more time to, attract new business, hold more client meetings, and so on and so on.
Make so my dinner.
Babysit Bill, yes.
Yeah.
Feed Bill, yeah.
And if I could add to that, I think one of the things that we've learned is advisor confidence is so important in the sales process. And a lot of advisors, when it comes to their advisory programs, they lack confidence because they really don't know what's going on. If they're picking a third-party asset manager, they're just banking on saying, yeah, I'm going to use this person or this group because it's a reputable name and it's hands-off and all of that. But then when something doesn't align with what they think, I think of a big asset manager now who one of the top in the world. You guys can all guess it, but now they got involved into some cultural things, and clients are asking, well, I don't want to be aligned with that. I don't believe in that. They can't do anything about it. They have no say in any of that investment management process. When you really start to develop things that are curated for them and align with their personal beliefs, their philosophy, the confidence that comes for that, you can't really explain it, but clients can feel it. They know what they're talking about is validated with research and it's stress tested. And I think that is just an enormous unlock. So I think that the role confidence plays in the advisory world, it's huge.
Well, I think, I mean, from that standpoint, right, you just said that what is their philosophy? I imagine as you start to build it, a lot of the advisors you start to work with don't really have an underlying philosophy. They look for those best performers and those high rankings. What are you finding as you work with the folks that you work with? I mean, there's a lot of education on that side, right? I mean, in helping them to understand and get to that. Can you share a little bit about how you help somebody develop and understand their philosophies?
Yeah. So we use a lot of different things. One of the coolest things we do is psychometric testing that helps unlock their kind of baseline beliefs. And these are tests that kind of the US Army uses, top Fortune 500 company uses. They use them as well. And we help them evaluate their personal biases as it relates to their investments as part of that. But another thing I think it's key for all advisors to remember is that different philosophies can be very effective. I remember a couple of years ago, the number one performing RIA was an asset manager that focused solely on dividends and value. And that stuck out to me because dividends and value have underperformed the broader market for about 15 years now, with kind of intermittent kind of burst of value coming in there. But it's largely been a growth driven market. And they asked this company, well, how did you guys keep building on this? And how did you become so big using a strategy that wasn't necessarily in favor? And it's that, well, it had nothing to do with it. We believe in this as the way to manage assets. And it gravitates the clients that believe in that as well, because they know that they can trust your ability to stick with something that you really believe in. And there was a lot of validation about dividends and the contributions to that over time. And they built this massive practice using a strategy that was out of favor because they had supreme conviction in that way of investing. So, long-winded way of saying that it's not necessarily bad to believe things that are out of favor. What's important is that you have conviction in your portfolios, and different advisors approach things different ways. So I think one of the interesting things we get to do in our practice is we get to work with an advisor on their terms and craft the best solution that's unique to them.
Mm-hmm.
And Tate, I think I took one of those tests once, and it said I should be a fire watcher.
Well, we're working you towards that, Bill. We're working you towards that.
Let's talk about some of the other things you do to support advisors. So it's not just creating portfolios. It's not just putting out updates and things of that sort. Talk about some of those other things you do to support advisors.
Here I can mention an important one probably is white label content. We provide white label commentary for our partners to support their communication efforts. And with more digital content now being consumed by clients, this type of communication makes sure that clients are informed and engaged on a regular cadence. We already talked about the market for leadership. Another thing that is relatively important is we help advisors and support them during their events. Basically, our team is your team, and we support advisors as portfolio managers at various client events, including Christmas parties or new client outreach, to help them showcase that. It's very seldom that you're going to get a portfolio manager from BlackRock or Vanguard to come to your personal events. And then finally, as Al already alluded to, we also help advisors recently now with annuity allocations. For advisors who utilize annuities in their practice, we provide an innovative investment management solution. And this unique solution helps advisors to deliver value in sometimes an overlooked part of their practice.
And I think whatever we can do to help get the word out on that, because I think it is so overlooked and such an unbelievable opportunity for advisors to increase the value they provide to clients. Now, you will also meet with clients. I'm sure it's not, just anybody. There's probably some types of minimums there, but I know you guys fly around a lot. I think you'll be in Florida next week. I know you were in Pennsylvania a while back, just a little while back. Talk about that a little bit, Al, please.
Yeah, that's the fun part of the business for us, to be honest. Being able to be in a room with an advisor on a case that they maybe didn't feel they fully confident in being able to win it, and then being able to help them execute that win. That gives us the greatest joy. So we've helped clients win multi-million dollar cases just by helping them with case design and then going into the meeting presentation. That's just a great feeling. Everyone likes to win new cases, but when we can help advisors do that and kind of fish upstream in levels that they weren't used to fishing, and ponds they weren't used to fishing in, that's a big plus for us. We love that.
And I think that's a distinction with a difference in terms of what you provide versus what other people do. And I think it really creates a unique, powerful part of your value proposition. I have seen the guys wasn't technically a Christmas party, but a client dinner. They did a wonderful job, and then they got mobbed afterwards, like rock stars. Everybody wanted to get a piece of them afterwards, and so that was really cool. Let's talk briefly about who should be reaching out to you. What types of, who's an ideal client? Talking about the advisors now for AMP Consulting.
So any Osaic advisors, because we're allowed to only work with Osaic advisors, that basically wants to optimize and differentiate the investment experience with an in-house investment team that is, of course, highly experienced, credentialed, and with a proven track record at a fraction of a cost of what it would cost to hire a CFA charter holder or somebody with a PhD designation. And by creating an in-house teams, this does not only improve the advisor's brand, but as we mentioned, it allows them to focus on various other vital parts of their business, like planning, client reviews, and growing their practice.
Yeah, I just say advisors who want to differentiate their practice. So Morningstar recently came out with a great infographic that showed what clients really value in their advisor. And it's still overwhelmingly planning and investments. And most of the clients we work with, they're great planners. They have no clue on investments. So anyone that really wants to differentiate themselves from the crowd that's largely using kind of off-the-shelf model portfolios that has no unique value proposition to it, those are advisors that really we work well with. They help substantiate their fee for one, and we think that's one of the big things to come in the future. The whole wave of CFPs saying we're going to do this for a flat fee because we don't actually manage your assets. We think that's going to be a growing trend. We think that there's a lot of intellectual honesty to that we're just going to charge you a flat fee because we know we don't manage the assets. And I think that's coming more and more, specifically the younger generation. We don't, tend to fall for that, hey, I'm going to pay you 1% and I know you're just handing it to somebody else. That's not going to fly with younger cohorts. So anyone that's looking to get a little bit more control of that narrative, have a better value proposition, and have one that's very distinct by having high credential talent on their team, those are our ideal advisors.
And Tate, I had a conversation with an advisor the other day, and he actually was familiar with Alan Marcin, and he said, I just don't want to, in these certain accounts, I just don't want to be responsible for picking and choosing. And I said, Alan Marcin, call him. And then I sent an email. I didn't even wait. But Tate, the concept of outsourcing, not just investment work, but outsourcing of all types of work is something that's really becoming more the rage, a trend in the industry. We're helping talk about some of the things we're doing.
I think, Bill, I think you're exactly right. Advisors are becoming keenly aware of where they're best at and what they do best. And there's so many opportunities to allow somebody that has that expertise step in and do it for you at a minimal investment that makes a difference. So, we do things from CEO, COO, CFO, a mixture of that for a lot of our clients, because a lot of the advisors don't get into this business to run a business. They get in to help people, right? And that's where they get in to help people. They don't necessarily come with all the expertise, but outsourcing allows them to bring that expertise in, have it be a part of their team, like Al and Marcin have talked about, and be able to say, hey, I've got this team and here's what they do and here's what I hire them for, so I can keep track of what's going on in your life. So it is that I think outsourcing will continue to be a trend. It is, right? The difference is finding people you can outsource to that deliver what you really need and what you really want is going to be the difference, right? That's going to be the differentiator. Everybody's an expert on something, self-proclaimed or not, but do they really follow up and back that up? And that's where Al and Marcin have come in with their offering, being able to do that and say, hey, you don't need to go out and just hire somebody that runs a managed portfolio to do it that you really don't understand. Let us help you understand and help you understand and build something that you can stand behind and understand and explain to somebody. And I think that's a real value, not just with Al and Marcin, but anybody that is looking to provide an outsourced solution. It's that credibility that's going to make that difference.
Well, and it's fun to point out that our partner Ben Mossman is not with us today, recording this podcast, because he's actually on site with a client. He's managing the client's practice, and the client is taking advantage of it and is out there just killing it because he's focused predominantly, almost entirely, on just sourcing, identifying opportunities, sourcing them, and executing on them. And this outsourcing trend is one I'm glad to see, and I think will only pick up steam as it goes forward. Right. So, Al, Marcin, we didn't call this meeting today to talk about the economy and the markets and all that, but how about a real quick high-level look where things are, where we're heading, and I would like to know which 5 stocks I should buy tomorrow.
Well, we can talk really high level. Let me start off here. Probably the 2 things that we want to talk about here is inflation and unemployment, because that's what the Fed is basically looking at, and that is going to determine the course of interest rate policy. So everybody knows on this call we had very high inflation. It came down from about 9% to where we are right now at about 3%. But as we all know, the Fed's ultimate target is 2%. So going down ultimately to that 2% level is probably going to be more difficult. Inflation is going to get more sticky. The Fed balance sheet is massively expanded post the pandemic. And getting back to levels before COVID is going to be probably very, very difficult, if maybe unrealistic for the Fed. So inflation is probably going to continue higher at this 3 or possibly even a higher level. And that has, as we already seen this year, a number of interest rate cuts have already been priced out. We started the year with about 6 cuts, and now we're down to 3. And Chairman Powell keeps pushing the ball down, saying when the ultimate first cut is going to happen, because that inflation has not gotten close to 2%. And another probably area that kind of maybe keeps them up at night is the very, very strong labor market. Today we've had another non-farm payroll reading which was above expectations. Unemployment rate is very, very low. Jobless claims are very, very low. Actually, my brother works at the Cleveland Fed, where he looks at a lot of this data. He developed a new kind of measure which basically jobless claims is a leading indicator to the unemployment rate. But he basically found that there's something actually better than jobless claims. A lot of companies that are large companies in the state, they have to tell the employees 2 months in advance before they are let go. They receive a notice that in 2 months they are going to be let go. And this is only statewide data. So what he does is he collects this data for every single state and basically captures the data. And this is basically a leading indicator to initial jobless claims, which in turn is a leading indicator to unemployment. It acts with about a 3-month lead time. So when there's a rise in this data that he's looking at, we're only going to see the unemployment rate spike about 3 months later. And that is also basically relatively low, meaning that the job market is very, very strong. It's very difficult to see a recession happening until that finally cracks and people are going to get let go. Because as long as people are going to have jobs, they're going to continue to spending, and that is kind of what we're seeing now. Credit card, people spend, they buy things because they have a job. And that keeps inflation higher. It's only once that cracks that possibly we're going to have a recession, but at least on a short-term basis, we haven't seen that, and that's why we're having this nice rally in the markets.
Yeah, and if I could take that from a more qualitative perspective, I think over the next couple of years, the job of the financial advisor is really going to be tested. Specifically from a behavioral coaching perspective. So we talked about in our December meeting the likelihood of kind of market melt-ups where people were so bearish last year, having so much money on the sidelines. And as those rates start to come down at some point, people tend to look for other things to do with that cash. And depending what they go into, they either chase markets that have been rallying, which historically leads to these kind of melt-ups, right? An expensive market that gets more expensive. Or something like that. So I think if you look to see what the advisor highest kind of impact role is in the advisory relationship, it's making sure clients don't do emotionally driven things at the wrong time or make bad decisions. And we are certainly entering into a period where you can see a lot of things that could happen, whether it's the election, whether it's the geopolitical environment we live in, whether it's valuations that get higher and overextended at some point, whether it's a second wave of inflation, where if you look back in history, after you have these big inflationary periods, they die down, but those are generally followed by a second wave that people don't expect. These are all things that I think are going to catch advisors, specifically advisors that have only been around for 15, 20 years and haven't looked back at history prior to them being advisors, that might catch them by surprise, because the whole world for the last 15 years have been driven by low interest rates and a lot of monetary stimulus. That's not going to be the same way in the next 10 years. And the playbook is going to look different. So I'd say making sure that they're prepared to have the conversations as to why that's happening with clients to manage those behavioral impulses. That's going to be critical.
And for that reason,
go ahead. Sorry, Marcin.
Portfolio construction and portfolio design is going to play a much more pivotal role in the next decade than it has in the past. Just to add to that point.
Okay. And one point I want to mention to the audience is that you guys are brilliant, but really you are connected with a lot of other brilliant people whose information, advice, ideas that you employ. Can you talk briefly about that, Al? Some of the relationships?
Yeah. I think the most brilliant thing about us is that we know we're not that brilliant.
I haven't learned that yet. Tate knows that, but I haven't learned that.
We're working on that.
I'd say we're good at what we do, but you can get caught in the echo chamber of your own thoughts, and more than ever, that's happening now. So for Marcin and I, it's always been critical that we stress test our research and our thinking against really smart people, brighter than us, to really poke holes in what we're thinking. And we've been lucky to leverage. It's a relationship business. We've been lucky to really leverage a lot of strong relationships in this industry. People that your clients and people who tune in today see all the time on Bloomberg, on CNBC. But these are friends of ours that we can pick their brains and just get a really independent view of what's happening. Usually when you're dealing with the big banks, the Goldmans, the BlackRocks, everyone's long only all the time. Everyone's got a specific narrative. Everyone's got this self-interest because they're publicly traded companies. It's all one way. So being able to just get perspectives that maybe don't align with what you see on TV all day, but is probably more in touch with what's actually happening. I think that's important. So it's not just us. It's a huge group of people that support our thinking and our research as well, to your point.
Cool. It is impressive when sitting in a meeting and listen to you talk about some of the people you just talked to yesterday on the phone. It's pretty cool. It really is impressive. So we're going to wind things up. Tate, any last questions or thoughts that you have for the guys?
No, I really appreciate you joining us today, guys. And I think, where you're at is going to continue to be a need for advisors and for the industry. So we appreciate you, giving us some of your insight. It's going to be valuable for the people that we're looking, to talk with, and it's just good for them to hear that. So appreciate your time and everything you put into it. It's fun to watch masters of their craft. And I'm curious, Al, have you taken one of Marcin's tests yet?
I get the pass, the friend pass.
I'll give it to Bill. Maybe he will.
Thank you. No, thank you. I'm way past that test.
Bill,
thank you. I just started reading books. I'm not ready for tests.
Unaudible.
Marcin, Al, last thoughts from you.
I want to just echo what Marcin said at the beginning. Thank you guys for all your support. You guys are great at what you do. And we really are convinced that to deliver successful outcomes for clients, it takes a team approach. So we're honored that you guys are part of our team, and the same way that we're honored to be part of other advisory teams. So we love that. And then just in terms of for the advisors, just the big takeaway is just keep paying attention to what's happening, because your clients are going to need you more and more as the next years unfold, for sure.
Marcin, anything in closing?
No, thank you for hosting this, guys, and it's a pleasure to know you. And we look to our story is just beginning. I think
that's right.
We're in the first chapter. There's many more chapters to be written. So thank you for hosting us, and we're looking forward to some time at the Bartesian too.
That's a whole nother topic for a whole nother podcast, Mr. Bartesian. We just I'll speak for our side. We just think the world of you guys. You're great people, in addition to being exceptional at what you do and doing it differently, in a different way with a different concept than other folks. And so we're very thankful that we found this relationship. As you mentioned, I think it was Marcin mentioned, unfortunately, right now, you can only help advisors at Osaic, but we'll encourage those advisors at Osaic to reach out to you or to reach out to us. We'll have contact information for everybody at the end of this podcast. And do not be shy. I'm not very bright when it comes to the investing world. I have people that take care. I have a person who takes care of that for me. And she has you guys, which is great. So, reach out to us. We can connect you with AMP. Real quick, where can they find you? We will put it on at the end, but where can they find you guys?
Yeah, best way, service at advisormanageportfolios.com. You guys can also find us on LinkedIn, where we put out a lot of thought leadership out there as well. Excellent.
All right. Well, listen, thank you to all for your time today. I think it was an exceptional conversation, even fun, very informative. Brandon, I want to thank you as always for your crack producing and directing. I would like to be edited out completely, please, of this entire thing. Make it all about your father. Anyway, to everybody out there watching the podcast, hope you've enjoyed it. This has been What's Next for Financial Advisors, the podcast. This is how we do it, and these guys know how to do it. Check them out, please. Do yourself a favor and spend a little time with Al and Marcin at AMP Consulting. That is Tate Kirst somewhere on your screen. Al and Marcin, I'm Bill Rambo, one of the founding partners of What's Next for Financial Advisors. As always, thanks for stopping by.
Thank you, guys.
Thanks, everyone.